first time since 2003 that we can honestly say literally every location in Australia has seen property prices rise all at the same time.
Going once, going twice, sold! You're listening to the Property Pod.
All right, guys, welcome back to the Property Pod, your weekly engagement into the real estate market here in Hobart, Tasmania and all around Australia. I am your host, Aaron Horn, and I'm joined at the desk, as always, by John McGregor and Patrick Berry.
Always love to be here.
Hey, how's it going?
How are we doing, boys?
Yeah, really good. Excited for this week.
I'm going to jump straight into it this week because we have a very special guest, a friend of the podcast, actually probably one of the first friends of the podcast.
Yep, absolutely.
I can't remember how many times it's been, but I think it's been probably 3 times, maybe.
Maybe.
And the one that gives us all the stats that makes us look good.
Yeah. No, definitely.
So today we'd like to welcome Simon Pressley back to the show. Thanks for coming back on.
Hello, gentlemen. Thank you for having me back on.
Not a problem, mate. For all those people that haven't heard before, Simon Pressley is the managing director of a buyer's agency named Propertyology, based in Brisbane, I believe, based on the colours of your football attire there, sir.
Yeah, based in Brisbane, but Brisbane's not our property market. Australia's our property market.
Yeah.
I like that. I like that a lot.
So I feel like you only ever reach out to Simon in footy season.
It's been a bit like that, isn't it? Yeah, we always seem to be mixing property and AFL.
With each other. Obviously, Brisbane Lions, happy with how they're travelling so far? I'd like a bit more out of them.
No, a very patchy start to the year. I think we've got the right cattle, but there's been a few personnel changes over the summer, and they're trying to get connections together, and a few changes with their game plan, I think. So, but as they say, you don't win premierships in September, so hopefully we get it right by then.
It's true.
It's very true. You don't win premierships early on, but yeah, no, it's interesting. The game's so different at the moment with this new rule of the standing on the mark, and it's speedy. It's all happening, so it's quite exciting to see what will happen, like leading into the later part of the season. I feel like the Lions will be in pretty good stead.
Hopefully, you're right.
Jumping into real estate, which is why we get you onto the show. You're a superstar. We actually were discussing some of your stats just recently, and John was kind of floundering his way through them as a stats man that he is. He was popping stats up on the internet last night, something about if you work for us at 414, you're 27% more attractive. Is that what you said?
That's science. Straight up.
So I have no faith in that stat, but hopefully Simon's got some real stats that we can actually look at today.
Well, at least I'll be the first one to admit if I don't know what I'm talking about before anyone else realises.
So, mate, the property market's going crazy. I know I was listening to the Elevate podcast just the other day, which you were on, and I think basically at the start, the big thing I took out of it was when COVID hit, you kind of were the only one to buck the trend and say kind of things aren't doom and gloom, like there's going to be a boom.
Yeah, this time last year when we were going into lockdown, and everyone, literally every bank in Australia and most economists predicted a massive downturn. We're not allowed to disagree with the downturn, but we went public and said there's going to be a boom and a bloody big one, and we're only a few months away from it. I think officially the boom started in about August.
With August, is that? Obviously we certainly experienced that in Tasmania with our market, but that was something you started to see right across Australia, or was it isolated in specific areas? What was the story there?
No, I think a lot of people forgot, John, that before we went into lockdown, large parts of Australia, maybe it started about 6 months before COVID, but large parts of us had started to boom. Yeah. I mean, Hobart's the exception because it's been the best performed property market in Australia over the last 6 years now. So it was already strong. But before COVID arrived, we had 4 interest rate reductions from the RBA. And APRA had started to, get back to normal borrowing levels again. So property markets are really cranking up, and supply was already low. So we factored all those things in when people said, COVID's going to arrive. And at the end of the day, is as disruptive as it has been, COVID's not a property market. It's a germ in the sky. Yeah. It has, some impact on things, but a lot of things it doesn't. So, the boom started pretty quickly, really.
Well, it's interesting, I often refer to you when it comes to people asking about where to buy, and I always go back to the early conversations you had around about fundamentals, and essentially, correct me if I'm wrong, but all the fundamentals hadn't changed at all. It's just all of a sudden we had this exception, like bug, like you said, that just popped out of nowhere. And of course, well, the second that resolves, like any illness, well, you just want to go back to your normal life, don't you? It's not like we've had some changes, but all the fundamentals hadn't changed in terms of the property market.
Spot on. I think like the economists, as well meaning as they are, they never have been property experts, and hopefully hopefully their COVID predictions has taught people don't bloody listen to them when they're commenting on property markets, because they never get it right. But for them, I think property's a dot on a spreadsheet, and property at the end of the day, it's shelter. And so when COVID hit, we still bloody need shelter.
Yeah.
In fact, it was a thing that we're spending more time in than most of us probably liked. The volume of properties listed for sale was already very low when COVID arrived. And when we went into lockdown, some of those properties that were then listed for sale were actually taken off the market.
Yep.
So supply shrunk because of COVID. And there was always going to be an economic response, a stimulus response from federal and state governments from COVID, because 200 years of Australian history shows that every time this nation is hit by adversity, we respond. Human beings don't like losing. We respond. We don't cop shit on the chin. So there was always going to be a response on the demand side, and knowing that we had tight supply before COVID, which got tighter again post COVID. To me, property markets are very difficult to forecast, but I have never been more confident with this forecast that there was going to be a boom. And I must admit, I started to second guess myself when literally every other Australian had predicted the complete opposite. I thought, my God, I'm going to look stupid here if I've got this wrong. But no, it's in the end, we were bang on.
No, it's really interesting. I also listened on this other podcast that was saying, I think first time we spoke, we were talking like maybe 4 or 5 markets you guys were working in. At the moment, you've kind of expanded out to 19 or something. Like you're just all across the country.
Yeah, and we had to sort of do that because of the record low volumes of properties for sale. We've got more clients than ever, and if we're focusing our attention on trying to get them in 3 to 5 parts of Australia, the waiting list to get people into markets could be as long as 6 months, and in some locations, markets can move 10% in 6 months. So we can't control the market pressure, but what we can control is which parts of Australia do we help people invest in, and we've extended our reach to now 10 different cities across 4 states. That said, it's still bloody difficult getting people into property markets at the moment.
Are you finding your clients in that perspective, because they're trusting your guidance to invest right across Australia, but are they having more of an opinion about where they want to buy, or are they trusting you more to say, look, I don't care where it is, you just put me where I need to be?
I mean, sometimes when a client reaches out to us, John, they do have some specific thoughts about where they'd like to invest, and other times they're very open-minded. Either way, we say to anyone inquiring about Propertyology services, please maintain an open mind. We would like to initially invest in your education about what drives property markets, and it's in your interest to have an open mind. If you have a think about the best performed property markets throughout all over Australia over the last 5 years, the best markets are not the ones that people predicted. The best performed capital city is Hobart. The next best performed capital city is Canberra. If you went back 5 years ago and did a straw poll of Australians, which markets are going to do the best, I guarantee you no one would have said Hobart and Canberra. And then there's a big bunch of regions that did better than all of those. And, there's always been a myth that capital cities are better than regions. That's complete hogwash. But that's what people think. So yeah, we always encourage people, just come on a bit of a journey with us, and we'll try to teach you a few things and see how you feel about it.
Well, it sounds to me that it's almost like you're trying to help them not get swept with the tide.
Absolutely.
Yeah. So you're going by the data driven and points of the market. Look, so it just don't listen to everyone else. Listen to what is true.
Yeah, we try to educate them on what that word fundamentals means, and then share with them some evidence on fundamentals of different markets. And what we're trying to do there is help people to make, I guess, add some structure to their decision making, rather than just saying, I want to invest here because it makes me feel good. Or lots of people are saying, that market might do well. That's not really research. That's just a lot of opinions about the one thing, but we've just been talking about all those opinions about what might happen with COVID. So it's often not the best thing to just do what the consensus is saying.
Yeah, absolutely. Well, I mean, one of the things you put together for us, which is great, where, I mean, the heading straight up just says Tassie real estate on top of the world. And it's this sort of 20-year trend of against a lot of other capital cities. And would it be all right, Tom, could you give us sort of, even for us and the listeners, a bit of a snapshot even over just a quick last 20 years that you've done here for us of the real changes since then to now and the growth that we've experienced?
Yeah, I mean, 20 years is obviously a long time. With the exception of the boom that's sort of just started now, there's only been 2 booms in Australia over that 20-year period of time. So what it shows is booms do not happen very often, and when they do, jump in. But for some perspective, to some bigger profile locations, Sydney's average annual capital growth rate over the last 20 years was 6.6%, Brisbane 6.8%, Melbourne 7.3%. Burnie in northwest Tasmania also had 7.3%. Not bad for a regional city of a population of 20,000 people to do as well as our second biggest capital city. Launceston beat them all at 7.9% average per annum. And top of the pops, Hobart, 8.3% per annum, Australia's best performed capital city. There were some other regions that actually did better than that, believe it or not. Byron Bay was the best in Australia over the last 20 years, but Hobart was easily Australia's best capital city.
All those influencers heading to the Bay, follow Chris Hemsworth and get on that new TV show.
Something like that, yeah.
And with that, because those, obviously the 20 years, we're not talking about, sometimes there'll be 1 year with more or 1 year with less, sometimes there's a pullback, but that's that averaged over 20 years, that's every year, that's what we've seen, that's what that stat's saying, yeah?
Correct, yeah. I don't know about you, but if I could buy a piece of real estate and someone could guarantee me that if I bought somewhere today and it was going to grow by an average of 8.3% every year for the next 20 years, I would jump at it, wouldn't you?
Well, I know we a lot of the time when we're going to clients' properties and they'll be helping their children or whatever, just buying their first home, and then the parents will pipe up and say, "Well, I bought my house for $60,000," and I just immediately turn to them and say, "Hey, this isn't helpful."
No, absolutely.
But what then? So with over those 20 years, are there real? What's sort of been a couple of real biggest factors, I suppose, for Tasmania, if we can focus on that specifically?
Yeah, well, the biggest boom that Tassie had over that 20-year period of time was actually the same time Australia had its biggest boom. So the 5 years ending 2005. Now, all of us were alive back then, but whether we actually remember what real estate did all those years ago is a different thing. But in that 5-year period of time, there were 128 individual Australian towns and cities where the median house price doubled or more in just 5 years. But as strange as this may sound, Sydney and Melbourne were the worst performed capital cities, and by worst, 57% capital growth in Sydney and 67% in Melbourne is far from horrible, is it?
Oh yeah, pretty good.
But they were among the worst performers in Australia back then. In that same 5-year period of time, Brisbane grew by 118, Burnie grew by 121, Launceston grew by 143% in just 5 years, and Hobart grew by 147% in 5 years. Crazy stuff.
Oh, actually, I know with at that time too, looking at when we're doing the trends, when looking at appraisals as well, there was the highest volume of property moving through the market too, wasn't there? So it's like during that boom, there was a lot to buy, as opposed to now where there's a lot of people wanting to buy but nothing to buy.
Yeah, and whilst this boom, I think, is going to be a very strong one, you're 100% right, John. Conditions were very different. There was a lot more properties listed for sale on the market, in the boom we were just talking about compared to now. Interest rates were about 3 times higher then than what they are today. So they were around that, 9% mark in that 5-year period of time. They're around the 3% mark today. So whilst the cost of credit was a lot higher back then, credit was more readily available. And that's not to say that banks were reckless. We know that they weren't, because there wasn't any sign of lots of bankruptcies or markets crashing after the boom or anything like that. People might say that that's not sustainable for property markets to double in 5 years. Well, if it wasn't sustainable, it would have ended in a crash, and it certainly didn't. So there's a few things that are different back then compared to now.
So speaking of kind of the lack of stock that's out there now, is that just got to do with kind of population growth and there's just more people, not enough houses, and trying to kind of balance that side of the ship out?
No, the Australia as a whole, Aaron, we don't have. It's not that we have not built enough dwellings. As a nation, we have more than enough properties.
Yep.
Where we have a supply concern is in two areas. We don't have enough rental supply.
Yep.
Rental supply is determined by investor participation. So the four of us and everyone listening, if there's not enough everyday Aussies that purchase properties for investment purposes, then there won't be enough rental stock. So over the last 5 years, there hasn't been anywhere near enough participation by investors, and you know all of Tasmania, not just Hobart, that's experiencing that, and not just now, but for the last 5 years. Really low vacancy rates, a lot of upward pressure on rents, and that's frankly because there hasn't been enough people invest in Tasmania. Been plenty of people buy property in Tasmania, but they've been predominantly the owner-occupier as opposed to the investor.
Yep,
the other area where there's a supply constraint is properties listed for sale. And that's actually, strangely enough, caused by a series of decisions, mostly governments, collectively over the last 6 years. So if we cast our mind back over the last 6 years, we've had 2 federal elections, and the number one issue that Australia was asked to vote on for both the last 2 federal elections was negative gearing. So if you own a property already and you're considering selling to, let's say, upgrade or something like that, you have your kitchen table dinner discussion with your partner, and you go, not a good time, dear. There's an election coming. They're talking about scrapping negative gearing. Let's wait and see what happens. So we had two of those federal elections. We've also had APRA that made it really hard for some responsible borrowers to get loans. So even if they wanted to participate, a lot of people couldn't do that. Yep. And then we had COVID come along. So we've had these series of events that someone wanted to sell their property, but then there's a big, scary event on the horizon, so they hold back. And when you have 5 years of those, periods of uncertainty, what that's resulted in is all-time record low volumes of properties listed for sale.
I suppose now too, is it if I'm just thinking like as if psychologically, it's like, well, I don't want to sell now. I mean, let's just stick in this house as long as we can and ride the wave. I suppose in Hobart, there's a lot of very much a chicken and the egg situation where people are just stuck where they're like, well, we want to move, but we can't because there's nothing to buy. So it's just self-perpetuating.
I think I heard on the Elevate one you were discussing kind of an idea, Simon, of the maybe coming to an agreement in the contract of, like a 3-month kind of fair market value rental deal to give people a little bit of extra time. Would you like to talk on that?
Yeah, so if you're an owner-occupier and you want to sell, but you're holding back putting your property on the market because you can't find anything to move into, I would suggest talk to your agent, list your property for sale. It will sell because we're in a boom. So you should have no fear of your property selling, but it's a legitimate concern about, well, where am I going to move into? So talk to your agent about, look, when we find that right buyer, you've got 2 tangible options, I think. If the buyer of the property that you want to sell is another owner-occupier, I'd be saying to them, look, we'll sell our property to you, but we want a 3-month settlement rather than the traditional 1-month settlement. So you lock in your price and you've then got an extra 2 months knowing exactly how much you can spend then to go out and actively look. Or the other option is if the buyer of the one you want to sell is an investor, ask them if you can sign a short-term lease. Sign a 3-month lease with the new buyer of your property so you're not moving twice. You've sold the property, you put the money in the back pocket, and you continue to rent what was your own home for a period of, say, 3 months while you're actively looking with that money in the wallet for the next home to move into.
It's interesting you suggest that, Simon, because that's definitely something that I know I've spoken to about a few clients here in Hobart, and I'm assuming you've probably done the same as well, John.
Yeah, it's a strategy we've had to implement here.
Excuse me. The vendors have a lot of power at the moment to be able to dictate terms as far as a contract goes because everyone wants their house, so they can get away with that longer settlement period or they can get away with negotiating a rental deal. because people are prepared to wait because they just want to secure something.
Yep, absolutely, Patrick. You are, if you own property at the moment and you want to sell, you are in the box seat. So whilst you might have a challenge finding something else, use the asset that you already own as a powerful vehicle to leverage you into something else.
Yeah, because I've talked to a couple of owners in the past that it's not necessarily always about the best price. It sometimes can come down to the conditions as to who you might accept at the end of the day and what works best for your circumstances.
Absolutely.
Actually, that's a good segue, because a lot of we're constantly getting asked at the moment, like, can you help me secure a property? What do we need to do to, get at the front of the line effectively? What are some suggestions, Simon, in your experience, that you could help? Like, if a buyer was looking to buy, what are you saying to them at the moment that's going to help them get the edge, if there is any?
Certainly make sure you've done the hard yards with your broker and got your finance pre-approved. Don't wait to go through that process once you've found a property. Get that done. Because when you're out there looking to as a buyer, it'll be you and umpteen others that are looking for that same property. So if there are half a dozen others that already have their finance pre-approved and you don't, you can be absolutely certain that the real estate agent going to the owner of that property is going to be saying, well, I'm not quite sure about this one. The price might look okay, but they haven't even got their finance sorted yet. So maybe we don't need to bother about that particular offer there. So, so do that. And you might need to get a little bit more commercially minded about the conditions that you put in your contract. Again, if you found that property that you want to buy, you probably need to see things through the eyes of the vendor, the owner of that property, and they've got other offers to look at. So if you've made an offer, not just the price, but if the conditions there are more onerous compared to some others, the owner of that property is probably going to be less likely to accept your offer. So, can you get hold of a building and pest inspector and potentially get that done so that you're not having to sign a contract with a building inspection clause in there? I'm not saying buy a property blindly, but just have a think about some things that you might be able to take control over to make your offer a bit more appetizing to the owner of that property.
Yeah, because it's just a reality, like you said, is it try and put you in. If you're in the vendor's position, you're deciding on the contracts, just think about, well, what would you be looking for? It's not really the agent in that sense. It's just you're trying to make sure that, well, the vendor's going to want certainty as much as possible. So you're trying to position yourself in a way to show to the vendor that, hey, if you accept my offer, this is a certain bet that it's going to proceed.
Yep, absolutely.
Well, one of the questions, we read an appraisal yesterday, and we were going through a little bit of because the gentleman had been in the suburb of Lutana for quite some time, so we had to really look at what had happened. But his next question was, how long do you think this is going to last? And I said, well, look, this is why I surround with people much smarter than me. I said, but tune into the podcast the next couple of weeks because we've got our expert coming on. So I'll delegate that question to you, Simon. You don't have to answer it, but if we could maybe use Tassie as a local, because I suppose it'd be too big a conversation for Australia, but if someone were to ask you, Simon, how long is this going to last? What would your response be?
Yeah, we got Australia as a whole. Firstly, it's a case of rising tides lift all ships. This is the first time since 2003 that we can honestly say literally every location in Australia has seen property prices rise all at the same time. That just does not happen very often at all. And that's because all of Australia has low volumes of properties listed for sale for the reasons we were talking about earlier, and we've got record low interest rates. So there are a couple of macro factors that are benefiting all markets. But what always has the biggest influence on property markets and why different locations produce different rates of capital growth is local conditions, local economic conditions, local volumes of properties listed for sale. Whilst they're all low, they're not all at exactly the same level, and local levels of confidence. So focusing now more specifically to Tasmania, Tasmania's state economy has been the strongest of all state economies in Australia for the last 2 years, and there's no reason why I see that changing anytime soon. The industries that are key to Tassie's economy, the outlook for those are strong, and the way that the Tasmanian government has responded to COVID, and every state government obviously had to come up with a package of sorts in response to COVID. You've got a construction boom going on. not just a residential construction boom, but I'd argue the most infrastructure projects that the state of Tasmania has ever had. So that's really good for the local economy. I think your tourism markets are going to get stronger and stronger as more vaccines. We have more jabs in arms. So that's going to be good. You got the world's best agriculture. You got the world's best booze. You've got the cleanest air. I mean, it's from an economic point of view, from a confidence point of view, I can't see that easing anytime soon. The supply side of things, while supply is tight all over Australia, Hobart at the moment has an all-time record low volume of properties listed for sale. Wow. So we're not going to see Hobart's property market, peter out to more normal levels of growth until supply gets back up to more normal levels, and it's got a long way to go there. But Burnie and Launceston have even lower volumes of properties listed for sale than their normal. So I can't say exactly how many years, but I think we're going to be talking years, not months, in regards to how long this boom might last. So when we were talking earlier about Australia's most prosperous era, that was a boom that for some locations went into 6 or 7 years. Okay. A lot of things could happen over the next 6 or 7 years. So I'm not going to pretend to be Nostradamus and know what might happen over that period of time. But this is not going to be a short period of time.
Well, mate, you called it pretty early with the last one. There was doom and gloom on everyone else's radar, but you said, no, things are going to be fine. So I think we will, heed your advice on this one and look forward to plenty of years of boom. And you guys need to get out there and start appraising more properties and listing them. Well,
it goes to just a quick thought is that how I suppose our job's going to become more important is that we're going to have to connect dots that don't exist yet. Because it's that if no one can sell or buy at the minute, the only way that they can do is somehow connect with each other, even though they don't know that they are. So I suppose that's where our role is going to change quite dynamically, is that we are going to have a much more pivotal in sense of connecting people without going to market or creating opportunities that otherwise don't exist, which is interesting.
Sounds like a very, very exciting time ahead. I think with that, we might wrap up our favourite friend of the podcast, Simon. Thank you so much for your time this morning, my friend.
Pleasure, gents. I'm always jealous when I get on this conversation because whilst I live in Queensland, I've always been had a strong affection for Tassie. Thank you for having me back on.
You're always welcome down here. Welcome in the offices. Welcome, mate. You can come stay on my couch if you need, especially if it's Bombers versus Lions. We'll make a night of it with some of that good Tassie booze.
Absolutely, got plenty of that.
Excellent, mate. Well, thank you so much for coming on, and that is the Property Pod.
Thanks very much, Simon.
Till next time.
See ya. You have been listening to The Property Pod, recorded and edited by 414 Media House in conjunction with 414 Property Co.
This podcast is general information only, and the thoughts and views expressed is the opinion of our panel, and listeners should always seek then use their own investigation into any topic we discuss to ensure they fully understand their own situation.
It does not constitute and should not be relied on as purchasing, selling, financial or investment advice or recommendations, express or implied, and it should not be used as an invitation to take up any agent or investment services. No investment decision or activity should be undertaken on the basis of this information without first seeking qualified and professional advice.